Hello and welcome to the big picture. The Indian stock markets are taking a tumble. For the second day in succession, the markets witnessed a rout with Sensex falling below 24,000 points, lowest ever since this government came to power in May 2014. The rupee also slipped to a new low in the tenure of this government, with it touching rupee 68 to a dollar. Meanwhile, news is not good on the exports front as the slide has been consistent for the last 13 months. The industrial production also has not shown good results, and so has rural wages. What is causing all this? Are we facing an economic crisis? How much of it is due to factors beyond the control of the government, and how much is it due to factors within its control? Or is this situation ideal, as some feel, to grab it as an opportunity to revive the economy? We will discuss all this today with Ajay Dua, former Secretary, Ministry of Commerce and Industry, N.R.Bhanumurthy, Member, National Institute of Public Finance and Policy, Arbind Prasad, Director General, FICCI, and Dhirendra Kumar, Head, Value Research. Welcome to all of you. Mr. Dua, are we facing an economic crisis? This tumbling of the stock market, rupee, reaching its new low.
I don't think the situation is crisis-like, like the situation we had in 2007 and 2008. It is worrisome, but not a crisis-like situation, if I might make this distinction, because this time a number of things have happened which are external to India. The two most important being, as
even 2007, 2008 was a lot of external factors.
Yes,
which
particularly if you at that time the American invasion of Syria.
Yeah.
But the difference is at that particular time that, for instance, the Indian currency tumbled and the stock exchanges went for a toss because everybody wanted to buy more dollars in order to be able to purchase oil, which was at a record high.
Right.
The situation now is different. It's actually the other way around.
Yeah, right.
When the prices of oil went down 2 days ago to below $28,
right,
there was certainly some demand for dollars more, but it wasn't the mad rush which we saw in 2007, 2008.
Right.
Similarly, this time, there is a clear impact on the global economy and also in India of what we are seeing in China. Of course, along with that, there are a host of Indian factors, internal factors of the kind which you mentioned, and the more important of those being, we have slowed down the reform process. Our exports are taking a hit, whether it's because of the yuan renminbi kind of a depreciation, or our industrial growth is not there. That is also hit by exports. So the difference, there is a slight different situation, but yet I am a bit optimistic that things could improve. Where there is a crisis would come, and God forbid, doesn't happen if our monsoon fails.
Okay. Bhanumurthy, would you agree with him? Do you think that it is what kind of a situation is this?
Well, I think, I completely agree with Mr. Dua, the analysis that I think underlying point Mr. Dua is saying that we are in a better position at the moment.
Than in 2007.
Yeah, and we also need to do much more to, take this opportunity. Right now, I think a lot of things are happening in the international economy. If you look at for the past 3-4 days, one is that, as Mr. Dua already pointed out, the international oil prices have come down, and we also seen the downgrading of GDP by IMF. I think these are the two things that have actually triggered in the 1 week, last 1 week, the whole behavior in the financial markets. But this is not a surprise. I mean, if you look at even the IMF report, it's not a surprise in a sense that we were expecting the slowdown in Chinese economy, except that the kind of currency devaluations that China has undertaken.
Even that was not unexpected.
It was not unexpected, but the timing was really unexpected, and the extent of devaluation was unexpected. So that, together with the tightening of monetary policy by the United States, is actually playing a major role in overall financial capital flows between emerging markets and the developed world.
Okay. Mr. Dhirendra Kumar? What is the impact of the weak rupee? You know, and also as far as the stock markets are concerned, why is it tumbling like this? Do you see an opportunity there also?
No, market. Yeah, I see a huge opportunity there, and I don't think this is anything unusual. I don't think we are anywhere close to a crisis. I think our economy is in a reasonable health, and what we are witnessing on the market and what we are witnessing on the currency front is something which is very usual. In our market, in fact, our market is far more robust. Of course, we have witnessed a big decline in a broad part of the market. But let me just remind you that small cap stocks have fallen substantially over the last 10 days. But these are the same stocks which went up by 20% without any corresponding rise in earnings of these companies over the last 1 year. 2015, the broad market did not go anywhere, and the small cap funds and index and the companies, a large number of them went up by about an average 15-18%. So that was quite a run-up, and they were actually having a good time for nearly 1.5-2 years. So I see it as a fairly healthy correction. I don't. There could be one problem. We have been very lucky on one front that domestic investors have been putting money in the market through mutual funds, and they were able to act as a reasonable counterbalance to FII outflows through 2015. This whole market the big fall has the potential to decelerate that, and we should be very it's just a matter of time that foreign investors will pull out money. They
seem to have already pulled out money.
2015.
Dhirendra, the foreign investor seems to have pulled out the money. About 25,000 crores is what people are talking about that the FIIs have pulled out.
Yes, so despite that, I don't think we are witnessing any crisis in the market, and I see that a big part of the market we have to wait for the earnings momentum to come back, and that is nowhere close. And we have investors are losing patience, waiting for the companies to do better, and I think that is still some time away. We just might be waiting for we might have to wait for 2-3 quarters for that to revive.
And how do you expect
our economy which is not out of woods?
Sorry, Dhirendra, how do you expect this momentum to return? What will be the signals for the momentum to return?
2-3 things. One is the economic momentum, and the other is the market momentum. I don't think market always acts in a hurry, and I would not attach great value to the market momentum. But I am hopeful that next 2-3 quarters we will have 2-3 things happening. One is that not the whole pack of the market, but and keeping aside the commodities pack, I think there could be something on the banking front, and it has little bit of cleaning up, and we could be in for a big surprise on the market front, because many of the stocks are so depressed. They are substantial part of the public sector bank is so cheap. Yes, they are bad banks. They have done the bad lending, but most of them are at a substantial discount to their book value. Even if we write off a good part of their book value, still they will be at a steep discount to their real worth. In fact, the irony is that today the capitalization of HDFC Bank is equal to almost all the public sector banks, including State Bank. That's quite funny. So I would say that markets behave irrationally over a period of time, on many occasions, and this could be one. And so investors will do well to have a plan and be steadily into the market.
Right. You said it actually. Markets behave irrationally. I remember once then Prime Minister Manmohan Singh talking about him not understanding how the stock markets react. You want to respond?
I just want to add to what
I'll come to you, Mr. Singh.
What we are seeing in the market, both the currency market as well as the stock market, is a much needed correction.
You think this is a correction?
I think so. And I'll just support it by
some months back we were hearing some people saying that the Sensex will hit 30,000, and now it has slipped down.
There is always a degree of optimism amongst the investors. But when I say this, I have in mind that our exchange rate, which certainly has taken a hit 2.5% since the 1st of January, meaning from 66, it was 66 on the 1st of January, 10 days later it had become 67, or 2 weeks later, and now it is 68. But if you look at the real effective exchange rate of our 36 partners, trading partners, there it is still the index.
We
Real
are still
index,
better than.
it is 112 is the index for the Indian rupee as of 15th of January. Whereas if it is about 100 or near about, it means the rupee is at its real value. So it is still about 12.5%. There is room for devaluation there. I'll just add to that the stock exchange point. Our stocks are trading or were trading till this week's fall at 18 times their earning for the year, which is unusually high price. So all that we are seeing is
that is where the irrationality comes in.
Absolutely.
No, I think the depreciation that's happening against US dollar, if you compare with other currencies, we are not depreciating that much.
No, that's right. But the problem is the exports are getting hit because of this.
No, not necessarily. I mean, I'll come to that.
You
later.
will come to that.
Yeah,
Okay.
yeah.
Mr. Arbind Prasad, are you also as optimistic as Dhirendra Kumar is about the economy, about the stock market? Is this something? Do you also see it as a correction? And as far as the industry is concerned, how is it taking this hit?
Has come at a time when the government is preparing the budget. So in some sense, there is a great opportunity for the government to take some steps. I'll just mention 2, 3. One, of course, as you have been seeing, the crude price is going so low. This is the opportunity to clean up the energy market. You see, on the one hand, there is an energy subsidy on kerosene, on LPG. On the other, you have excise duty, which is being increased. Now we are talking about cess. So this is a time the government can clean up the entire energy market, where the subsidy are reduced or almost removed, and the excise duty is rationalized so that the market price for the fuel remains at a reasonable cost. So that is one opportunity for the correction. Second is that when the budget is being made, the government can focus on the growth. Particularly investment in infrastructure, sectors like real estate, which needs push so that you create demands in the market. Basically, Indian industry is not growing because of the weak demand. Third, because of the China slowing down, we have been seeing in the industry, in some of the sectors, China has been dumping in Indian market, particularly in steel, chemical, API, pharmaceuticals, ingredients. So the government machinery has to be quick in responding to anti-dumping duties or safeguard duties. So I think that the slowdown in China and also improving economy in USA has led to withdrawal of dollars, and I agree with the previous speakers. So that has broadly impacted the rupee and also the stock market. Indian fundamentals remains strong. There is a need to give push to the economy, which has not picked up in the last 1 or 2 years, which was expected with the new government coming in. So this budget exercise, which is under preparation, gives a huge opportunity to the government to focus on and give support to industries.
Mr. Prasad, you're talking about the huge expectations which were there when this government came into power and all that. But ever since the last 1.5 years that this government has been there, one of the problems which is being faced by is also about lack of private investments. Why do you think the private investments are not happening?
Well, you are right that private investment has not picked up much, though there has been some excess, the increase in FDI, and some public sectors have also invested. Our interaction with the industry shows that their capacity utilization is very low. In some cases, 30 to 40% capacity is not being utilized. So primarily, it is the demand in the market which has not been huge, and therefore the industry at this stage is not in a position to further invest in enhancing the capacity. So that is why I was referring to giving boost to sectors like real estate, because real estate has impact on almost 200 industries, and the experience in the past has shown that a boost to the real estate increases the demand. So consumer goods, real estate, of course, the weakening in the not so good monsoon has also impacted some demand in rural areas. So focus on investment in rural areas, particularly in sectors or schemes which leads to some investment or some cash flow in the rural areas would also help.
Okay. Mr. Dua, demand is not picking up. Whatever optimism is shown by various people, the fact is that demand is not picking up. And private investments are not picking up. Are the public investments picking up at least?
Marginally. If you look at it, what has picked up is government expenditure, not necessarily into the investment area. It has been government consumption expenditure. What is
and now
needed,
with the pay commission coming in,
it will
extra,
be more like a consumption expenditure. What is required is investment to GDP ratio has to go up, which is down from 38% of the 38% in 2009-10 to 28% last year. We don't know what will be the figure for fiscal 16, but it doesn't look like it has picked up much. And the reason is, as you yourself alluded to, because a large portion of it is private. Out of 38%, I would say 27 to 28% is contributed by the private sector and only 10 to 11 by the public sector. A marginal increase there, which in national highways probably it has happened because the government moved from the concessional model to a direct EPC model as per the government's budgetary position, facilitated by oil and gas subsidies, etc., getting reduced. The demand has to be increased, but not necessarily consumption demand. It has to be investment if we have to go back to the 8% plus rate of growth. And I think we have an opportunity. A lot was said about the budget, though we have to be moving away from the budget with an economy which is 28% of investment comes from the private sector. We have to be looking at how to create assets in the rural sector, assets which will yield result by way of increased irrigation, assets which will result in better productivity gains, etc., taking place, which could be even roads.
We have been talking about all these things, No, you can respond to that, but I want you to respond to another aspect. The fact of the falling prices of oil, and Mr. Arbind Prasad was talking about how the correction needs to be made there, in that sector, because excise duties are going up. The prices are falling, the excise duties are going up, and he's talking about some kind of a cleanup of the energy markets. Yeah. No, all those extra revenues which have come in because of the falling prices and the higher excise duty, where is it going?
Yeah, no, I just wanted to start from what Mr. Dua has talked about, government consumption expenditure. I slightly disagree with that. If you look at this particular year, I'm not really sure in which component of the government consumption expenditure has gone up.
Except the pay commission.
Even that is
marginal.
Even that is not been implemented.
Right, it's not implemented.
Food Security Act is not implemented.
Right.
Subsidy.
And Narega funds have gone down.
Yeah, and subsidy bill is coming down because of the decline in the international oil prices. I'm not really sure which part of government consumption expenditure is going up. But on the other hand, this year particularly, the government actually front-loaded capital expenditure in the first and second quarter. I think that is need to be looked at. I mean, I don't know what kind of impact it is going to have on the private investment, but this particular year...
So far it has not had any much impact.
It's not really clear about what is the private investment is doing with after public investment happening. So the government consumption expenditure, in my view, would be much lower than what we have seen in terms of growth compared to last year. On the other hand, because of the 14th Finance Commission devolution, the resources that is available for the government, central government, in the particular this year, must be much lower than what it was last year. So I think the government consumption expenditure, when we talk about, it should be both central and state government together. So we really don't know what is happening at the state government.
State level.
On the other hand,
Can I just
Yes,
butt
one
in?
second.
and on the other hand, if you look at the NREGA, I mean, we have gone to many states. This year particularly, the funds have gone from the central government to state government. But then from state government to the local.
It is not.
That is the.
Is that a trend which is across all the states, or is it confined to a certain
I
states?
think most of overall, if you look at this year particularly, the percolation of NREGA funds to the rural segment appears to be very low compared to last year. So that is one of the reasons why there is not much of demand in the rural segments. And one of the reasons why yesterday the Prime Minister's office came out with a suggestion that NREGA has to be re-looked at so that it will create capital assets and all those things. That's a different issue altogether. On the oil markets, I slightly disagree with the FICCI representative. I want to understand where is the subsidy, Now the price have come down.
No, he's talking of kerosene subsidy.
No, even there,
Yeah.
if you look at the prices have come down from $110 to $28.
$28.
Have you seen that kind of sharp reduction in the domestic prices? We have not seen
We have
that.
not seen that.
So there is a huge net transfer going from oil markets to the exchequer.
That is exactly the point. And what is happening to that huge funds, which revenues which are coming in?
So that if you look at, there is a stock of subsidy
I'll come to you, sir.
There is a stock of subsidy bill which has not been financed for the past 5-6 years. One of the things that they may be doing is they may be financing the oil companies for the past subsidies.
Exactly.
I'm not
That's
really
the
sure.
point I was coming to.
Yes.
A whole lot of subsidy bills which had been deferred
Yeah.
to the OMCs, oil marketing companies, plus something which extra had been taken from the upstream companies like ONGC.
Is that the reason why the excise duties are being hiked regularly?
Those don't need to.
They don't
these
need
are
to.
being hiked only for government revenues.
Right.
But consumption
To bridge the deficit.
Consumption expenditure which Mr. Bhanumurthy referred to, so that's what I wanted to clarify. The extra income has been used, definitely used for clearing the areas which remained.
Yeah.
And second, the buoyancy in the taxation has not been of the order as was expected, because the rate of growth has been, GDP rate of growth has been lower than, you see, what we have to be looking at is the nominal rate of growth.
Right.
Nominal rate of growth, which in Q1 of 2014-15 was 14%. That in the last quarter, Q2 of 2015-16 is down to 5%.
But
Right.
the contradictory
So,
result there is, sir.
Yeah.
If you look at the midterm review,
Yes.
they say that there is a sudden jump in the indirect taxes.
This one, no, total I'm taking
So
as a
where is
whole.
it coming from?
That is, we don't know.
Mr. Prasad, you want to respond?
No, I just wanted to clarify. I never said that the subsidy amount has gone up or government is spending huge money. What I was saying that because the cost is going down, this is an opportunity to make it an open market economy for as far as energy market is concerned, particularly because the price itself is very low. So
No,
this
but
gives the government an
except kerosene.
opportunity.
Except
to
kerosene,
reform the
everything
energy
else is a
market.
market economy. Everything has been deregulated. Petrol has been
Some
deregulated.
amount of cooking
Diesel
gas.
has been deregulated.
There is a- gas still.
A very little of cooking gas.
LPG.
Cook-
LPG remains.
No, whatever it is, cooking gas, kerosene, fertilizer, industry, fuel. So all those industries, wherever energy is being subsidized on the one hand, and then you have a huge excise duty, there is an opportunity to clean up that market. I'm not going into the figure whether there has been an increase in subsidy or decrease in the subsidy. What I'm saying that low fuel price gives an opportunity to the government to clean up the energy market.
Okay. Dhirendra Kumar, what are the kind of opportunities you see in the situation which we are in today? Which sectors do you see that opportunity?
No, I see this is a huge opportunity in terms of the way we are getting cornered, and there is unlikely to be a demand, a revival, simply because we are living in a globalized world, and when you have a lot of idle capacity built up over the globe, and it will find its place. So in that sense, there's a huge opportunity. We are cornered to a situation. We are relatively lucky in terms of our, the economic growth rate still intact compared to the world. Cleaning up of the PSU banks, I think, we are coming to a point, coming to an inflection point where the government will have to take a very harsh look at what they are into. Well, is it really worthwhile to be running a large nationalized banking system which just doesn't work and it fails often, and then they are actually they will be guzzling taxpayers' money. The other is that we have really been lucky with these oil prices fall, and it is an opportunity to clean up our subsidy mess, because this is and this is also going to create a lot of problem for other industries, the power sector, the coal-based power sector. Energy prices are fungible.
Right.
So we are unlikely to be in a situation, and if energy prices are fungible principally, then we will have one segment of the market which is collapsing, and other part of the market which is worked on a fixed margin basis that has to realign.
Okay.
And we have huge power capacity being built up over period. So I think it's a huge opportunity. We still have low-hanging fruits which the government can look at to revive the economy.
Okay. Mr. Prasad, what are the opportunities you see for the industry in this situation?
Yes. No, as I said that the government is the right.
No, I'm talking from the industry's point of view. Forget the government's point. The industry's point of view. How do you think the industry will respond to this? Do they see opportunity here?
Well, of course, particularly when the China is slowing down, there is an opportunity for the manufacturing, particularly when in the sectors where India is the huge consumer. For example, defense. India has been importing a lot of defense equipments. Given that the government is giving a huge push to the defense purchase policy, leading to us focusing on purchasing from the domestic industry wherever it is possible. With the support of the government, Indian industry can come forward for the joint technology tie-up, for the manufacturing, creating manufacturing base, working with the army and defense to support them to their ambitious goal of creating a manufacturing base for the defense industry. Other sectors also, like infrastructure, like shipping, and other sectors where you have opportunity in infrastructure. Of course, highways, the primary lead has to come from the government, because large number of projects, large number of initiatives by the private sectors have got stuck up.
Okay.
Government has come up with a scheme or policy to clean up the initial PPPs, so the industry can take up those opportunities and move forward.
Okay. Very quickly, Bhanumurthy, you think that, so you are convinced that this is not a crisis, this is something which we'll be able to overcome?
Yeah, I think definitely this is not a crisis, at least for India for that matter. There may be some short-term aberrations in most of the financial markets indicators. But I think in terms of fundamentals, we are still fastest growing economy in the world.
Okay. Mr. Dua?
I think
very quickly.
I think we are going to be working now in a volatile situation.
Right.
Yeah.
Volatility both in the currency market as well as in the stock market. So the opportunity for the investor is to pick up quality value stocks rather than everywhere, and stay calm, hold on and stay calm.
Okay.
Rather than, and for the government,
As far as the government is concerned.
and as the government is concerned, I think this is a God-given opportunity to it to be able to invest where it could not in the past. Social sector, education, health and infrastructure, which it has experimented with the private sector, PPP models, which have not worked entirely. And finally, I would say railways. Because railways is the one which is opening up the economy if you invest heavily in it.
Okay. I think on that note, we'll end. There is a certain bit of optimism. There is also a lot of warning about the state, the condition in which the economy is. We'll wait and watch how the government will react to it. And as the budget is not too far away, we'll get to know a little more about what is the status of the economy when we see the budget. Thanks to all my guests. Please keep watching. We'll come back with another issue in the big picture same time tomorrow.